All right. Hello, everyone. So thank you all for sticking around. I know we had a lovely speech from RFK, and it's great to be here. And I know we have a little bit of time to catch up on, so I'm just going to jump right into it. First of all, let's set some basis. Those of you in the audience, how many of you have used DeFi before? Raise your hand. Okay, that's pretty good. We're looking at like maybe 30, 40%. That's actually better than I thought. For those of you who don't, we're going to probably do some basics before we get into the deeper discussion. So I've got a great group of experts here, and what we're going to do is kind of divide it up and talk a little bit more about what is DeFi and essentially how you can use it. So starting out with Preston, what is DeFi? What are the advantages, decentralized finance to use the full term, and why would people be interested?
Yeah, I think we start with the basics that DeFi, decentralized finance, is programmable finance that is meant to be conducted between individuals on a peer-to-peer basis, that's run on blockchain, and then could be controlled by smart contracts. And that is kind of like programmable if-then statements. And on top of this kind of infrastructure on a peer-to-peer basis, you're able to build traditional-looking financial products and services that are available to people without intermediaries, so without third-party institutions or other third parties being in charge of conducting those transactions.
So potentially no third-party doctrine.
That's right.
All right. Well, okay, so that's cool, but what can you actually do with it? So maybe next question to you, Bill. Decentralized exchanges, that's a use case we've heard a lot, like Uniswap and others. What is a decentralized exchange? Why is it different than what we might otherwise be familiar with, Coinbase or Binance or FTX?
So a decentralized exchange is you replacing an intermediary like a bank or an investment banker with computer code. Best analogy is a vending machine. You have a candy bar. You want a different type of candy bar. You want to trade one for the other. The vending machine in traditional finance is an institution. In DeFi, it's computer code. And you can go to that vending machine, put in your candy bar, and get out the one you want. You swap them. And it's done with computer code. There are some mechanisms where the computer code actually connects two different parties. Most of it, when you think of Uniswap, it's really just you using the computer code yourself. There's nobody on the other side. It settles instantly. The transactions, the record of it lasts until the heat death of the universe. And all you need to do it is have a wallet, like the MetaMask wallet. Our MetaMask team is right here in front. Come to our table back there and say hi. It is a platform that allows you to engage in financial activities yourself without relying on anybody else. All you need is the computer code, and the computer code is already there on the blockchain waiting to be used by you.
Awesome. So basically we're talking about, when we say not your keys, not your crypto, you don't have that problem when using a decentralized exchange versus a regular one. So it sounds good to me. But that's not all we can do. Another thing we can do is lending. So I know Compound and Aave are some great examples. David, can you tell me more about what would a lending protocol look like?
Sure. So if you're already living in a crypto native economy, right, you're holding Bitcoin, you're holding Ethereum, the natural question becomes, okay, what can I do with it, right? And, if we're going to build up finance in a totally decentralized way, we have to reabsorb these old use cases from the financial world. Lending's a really obvious one. Aave, Compound, there's a bunch of popular protocols. I particularly like Thorchain because you can use native Bitcoin, native Ethereum. They just launched lending as well, but there's no wrappers, there's no bridges. It really takes a lot of the intermediaries out of the process and just lets you hold your own custody of that native asset and put it to work, right? So I really like people pushing the bounds of that. I think during the last bull market, there was a lot of DeFi in name only, right? Projects that were claiming that mantle, but didn't really have that in the back end. The technology's come a long way the last couple of years, and now we have really truly decentralized systems where there's no counterparty, there's no intermediary. It can be done entirely by protocols and smart contracts. So I think that's an important step as we go into this next cycle, that's what we're building on, are true DeFi protocols.
All right. And I know, having experienced some work with Compound myself, when you get into a lending market, even though a lot of it can be decentralized, or let's say automated in the way that the smart contract handles it, there's certain things like, pricing and risk parameters, and even like changing the code over time that needs to be done for these protocols to really effectively operate. And a lot of that is actually being done through DAOs or some sort of a decentralized mechanism, so that even those decisions don't introduce the concept of a third party to some extent. So Miller, can you tell us more about that and how it works in practice?
Yeah, you're exactly right. I think of governance as performing two functions. One is something like risk parameters for a protocol that you want to change. For example, how much collateral you need to do a certain kind of borrowing. But I think more broadly, we have these software programs that are deployed on layer one blockchains. And to your point, the technology has advanced quite quickly in the last couple of years. And there has to be a mechanism to upgrade the code and manage it over time. I think it's one way to think about it is Bitcoin miners essentially play this function when they choose which Bitcoin software to run. And because DeFi protocols are deployed on a blockchain, their governance doesn't perform the validation function. They do perform the governance function, so it's kind of split out, unlike in the case of Bitcoin.
Gotcha. So basically kind of taking the same kind of concepts of governance and applying it to more use cases. So, all right. So, I mean, in my practice, I've seen that this can lead to some very exciting ideas. I mean, the DeFi market itself has gotten to about 46 billion, I checked today, in terms of the assets being managed. We've even seen it over 100 billion in the past, and we're probably likely to see the usual curve hopefully going up. But in terms of the impact we're seeing today, I want to talk about, like, okay, how does it compare to traditional financial services? How are traditional financial intermediaries using it? And then also, overall, like what kind of impact can we see where we're actually going to get real value out of this beyond just, cool test cases, like actually seeing people use this for large scale applications. So I'm going to open this up to the group, but I might start with you, Bill, just because, you're at Consensus, you're rolling out, like, you've been using MetaMask and actually rolling out a rollup and other things that are very engaged with DeFi. So, like, what have you seen are the most impactful use cases? And then I'll start going around the room and talking more.
I think our company is really focused on supporting builders, meaning essentially software developers, giving them the tools and the resources to go off and create and deploy their creations. There's just some fundamental transactions that you need to perform when you are in the process of building software protocols for the blockchain. You need to be able to swap tokens. You need to be able to bridge tokens from one protocol to another. All of these require smart contracts, essentially blockchain software to move the value from place to place so you can actually use it. We very much believe that blockchains should be used. This is not just a mystical black box where you buy a fake internet money token and hope the price goes up. These things need to be useful. And it's these fundamental protocols of going from token to token or going from protocol to protocol, which we see used most by developers who are building applications that users of cryptocurrency want to use, whether they be commercial, social, financial, and other builders want to use. And we're certainly seeing a big uptick in that sort of activity with the last many months. So the future is pretty bright and exciting.
Well, I mean, Uniswap alone, there are times where the fees being earned on Uniswap, which is a decentralized exchange, one of the most popular, is higher than the fees being earned by Bitcoin miners. So, I mean...
And the one other plug, we just released this year a layer 2 protocol. There are plenty of layer 2s out there. The idea of a layer 2 protocol, it's faster, it's cheaper. It relies on the security of Ethereum. These layer twos are important because they allow different applications to be built on different ones. They can be optimized in certain ways, and we see a lot of this construction as well, where they're building the fundamental infrastructure that gaming, entertainment, all sorts of different applications can really be built into the technology.
How about you, Preston?
Yeah, as Bill just mentioned, as these building blocks are developed by creators and innovators, we're going to start to see an explosion of growth in financial products and services that we're accustomed to seeing today. We're going to see lending and borrowing products, investing products, fixed income products, fractionalization of real-world assets are certainly coming and accelerating. But those products are going to be made available to users and consumers at much lower costs, much lower premiums, lower account balances. So we're going to actually see products become available to the underbanked, the unbanked, that haven't been available in the past. We're going to see insurance products come available. Those kinds of things are going to open up our economy. And I'm very, very excited to see how that kind of economic expansion will affect not only our industry, but certainly the community at large.
100%. All right, Miller, David?
Well, just to build on what Bill said, MetaMask released a very important product this year called Snaps. And just to highlight one of my favorite is Shapeshift did an integration with Snaps right away and effectively gave everyone the ability to put native Bitcoin into MetaMask for the first time. I mean, that's incredible.
Use MetaMask to store your Bitcoin. That's right. Pay him to say this either.
That is a huge step forward to create that interoperability where it's not just Ethereum, but it's Bitcoin, it's Ethereum, it's these other second layer chains. And all of a sudden I can use that inside of a DeFi context thanks to those rails. So big credit for you guys for releasing that. That was an important step forward for the community. Absolutely.
All right. Anything to add, Miller?
To me, the beauty of Bitcoin is the ability to self-custody your assets and engage, use the system on a permissionless basis. Doesn't matter who you are or where you are. Wouldn't it be awesome to be able to engage in financial transactions beyond just payments and make that world fleshed out, be it exchange or borrowing? So I think about DeFi as being expanding on the vision of Bitcoin in a way that makes it more viable for worldwide mass adoption.
I mean, the thing for me that is most exciting, we had a panel on self-custody earlier today because it's such an important topic. And I like the fact that DeFi says, okay, let's say we can have fun with our Bitcoin and our other crypto, expand to these other use cases, but still keep that core concept of self-custody at the forefront. So, but we are here to talk a lot about policy. We have plenty of other politicians that will be coming up to speak. So let's get into what are we concerned about in this industry? So I think the first question I had on here, once it opens up, is, sorry about that. And then, policy challenges. What are things that we are concerned about today when, we look at the landscape in terms of what regulators need to know? So I'll open this up to the floor. What are you worried about in terms of the regulatory environment in the United States when it comes to DeFi and things that could challenge its ability to, well, let's just say, make the innovation available to American consumers?
Well, I mean, I'm happy to start. The fact that you've got sitting senators threatening self-custody is the red line. People have a fundamental right to privacy. They have a fundamental right to free speech. Running something on their own computer with no counterparty, there is no role for government whatsoever. End of story, right? And so we need to hold that red line. Thank you.
Yeah, I'll start. I completely agree with you, and I think it highlights and underscores a point that is sometimes lost, which is a lot of the DeFi policy issues are really Bitcoin policy issues. I think self-custody, and Senator Warren was referencing, slandering self-custody in the context of DeFi, but of course, every Bitcoin out of there had a heart attack, as they should. Ultimately, the government likes intermediaries, be they Western Union, JP Morgan, or the New York Stock Exchange, in order to implement their policy objectives. And that has been possible given the fact that you needed those financial intermediaries to engage in pretty much any economic transaction historically, except for cash in person. That world is gone, and the regulatory and policy world, I think, is not only going to take a while to catch up, but take a while to come around to the utility and benefits of that, or at least come around to the fact that it's not going away.
I am not worried about Elizabeth Warren because she does not get laws passed. I'm not worried about Gary Gensler because he's going to be moving on in a year and some change. Plus, the only thing the SEC can reliably do is get their ridiculous theories thrown out in court. What I worry about is hacking and money laundering using a permissionless system. You have nation-state threats like the Lazarus Group. You have terrorist financing to worry about. This is the one issue that is really difficult because it's the one where the powers that be do not screw around. I was just at a congressional hearing yesterday about terrorist funding in crypto, and I think there's a lot of proponents out there who view the technology as not being the problem, but there needs to be mitigation. There needs to be reduction of the risk because the costs of getting it wrong are so high. I think ultimately this really this raises attention at the heart of crypto. Like, what does permissionless mean? Permissionless means both the good guys and bad guys can use it. And the problem with that is the bad guys use it for crimes and off-chain and on-chain to hurt the good guys. And what do we do about that? The powers that be are not going to stand for that. And I think it really is the critical, I won't say existential, but it is the critical question that confronts DeFi and permissionless blockchains more generally. It's what are we going to do about bad actors using it and using it in ways that actually hurt people in real life? And I think the critical thing here to have this play out in the right way is that these things have to be used by millions and millions and millions of people, because we accept a lot of risk and a lot of calamity and a lot of danger in life as long as the utility is there and the popularity is there. Like, they wanted to shut down TikTok, right? They can't, because 100 million people will lose their minds. And the national security state wants to get rid of TikTok. They cannot. They wouldn't be able to sanction Tornado Cash if 100 million people used it. So it's got to be used. It's got to be useful. It's got to be used. And we also have to have a conversation in the community about how we safeguard the good people from the bad.
Right. Well, I wholeheartedly agree. And I was just going to say, I think people should check out the recent proposal for privacy pools, because that would give you true freedom of association and to prove you're not associated with a bad actor, while remaining permissionless, while remaining self-custody, without introducing a counterparty. I think totally we got to grow mass adoption, but also there are good technological solutions we can use to really address that going forward. And so I think we got to spend a lot of time getting those implemented and rolled out this next year.
Yeah, and I mean, when I hear this talk about, like, how do we, permissionless technology, how do we deal with bad actors? I remember we were talking about this panel, we talked a bit about the crypto wars, and we talked about how encryption, when it was being discussed in the 90s, the government was trying to crack down on it. They didn't want criminals and bad actors to use it. And then there's this question, like, of utility. Well, what about the good guys? The good guys can't use cryptography either, at least not in the public or the private sector. And I guess the question I keep coming back to when it comes to that is, ultimately, it's just the problem of open source code. And the reason the crypto wars went out is because you tied it to free speech. And we heard Vivek talk about that earlier this morning, which was a good call out. So it's on the presidential trail now in terms of that discussion. But yeah, I guess that's the next question, is how much does DeFi also fall into the same category of free speech as code? Because the key difference to that is free speech as code can be published, and then how someone uses it is then determined by, basically it's like a blueprint. Someone can take the blueprint and then start using it for something, and then they're the ones responsible, whether they're a bad or good actor. But blockchains are a bit different because they go the extra mile with a smart contract. And so not only is the code public, but it's also running on a blockchain that is itself permissionless. So that's a bit of a can of worms I'm springing on y'all, but I'm curious if any thoughts on like how do we thread that particular needle? What do we do when it comes to telling policymakers how to, it comes back to your original point, how do we show them, one, we want to show utility, but two, how do we show that the problems can be addressed by engaging with the industry? What are the sort of solutions we might think about? Privacy pools, maybe we can expand on that.
Sure. Effectively, there's a difference between regulating language, math, cryptography, call these foundational models, versus the application layer, right? What are you using it for? Are you doing something good? Are you doing something harmful to people, right? And I think that's an important line to draw, is that math, and I'm going to cover this a bit tomorrow, but math and language and cryptography need to be available to all humankind. And the logical place to intercede is there are already laws against doing bad things, right? And we ought to go after those bad actors, certainly, but that doesn't translate to we should ban math, right? And so I think most people would say that's reasonable. We should differentiate between the two.
I think it's a hard sell to get. We're pretty good on freedom of expression in this country, at least. Other countries, less sterling track record. But it's a hard argument to say a lot of the activity on these chains is like purely expression that's protected under the First Amendment. I think you are going to see down the road the regulation of the development and use of certain software if software really becomes the new intermediator. And the question is, well, who gets regulated under what conditions? DAOs, obviously, and decentralized organizations open a big old can of worms. But if it's a company making money off of software they maintain and that software is being used, like that's a good starting place for, and then the question becomes like, well, what does that regulatory framework look like for that type of software? And I think it's dictated by the activity the software is performing. And it doesn't have to look, but the point is, whatever it is, it's going to look entirely different in many respects than the current regulatory regime. But I think that is probably where we're ending up. And I think you're also going to see, I think the trend is towards the base protocols and the basic functioning of those base protocols being considered different enough in kind where they are not subject to that regulation. And I think that actually probably gets us to a pretty good place. And one which would engender, I think, broader participation by regulated entities like banks and financial institutions in this space, which is obviously going to be very important.
Michael, I'll just add, I think I hope this is a long tail problem that centralized governments and decentralized entities, whether it be code, blockchains, or networks of people, are very odd bedfellows. It's very difficult for a government to enact policy, legislation, regulatory oversight, etc., over decentralized concepts and entities. Maybe we see things like disclosure requirements broadly applied, but I want to think and hope that this is a long tail issue in our industry, and that the near tail things will be centralized finance. It'll be centralized entities. It'll be things that are easier to address in a more direct way. My intuition is that the DeFi is a long way off, or maybe that's just a private hope of attempts to regulate.
Unfortunately, the U.S. government is ahead of you. For example, there's a Treasury rulemaking called a broker rulemaking that says any system that allows people to directly or indirectly engage in a DeFi transaction is a broker, and that requires centralization. So the government's answer so far has been either no such thing as DeFi, or if DeFi exists, you need to shut down, centralize, or get out of the U.S.
What was that last sentence?
Centralize, shut down, or get out of the U.S.?
Yeah, I think they just scatter. I think they just adhere to their decentralized nature and move. I think that's
could that be why 19 out of the top 20 protocols are not in the United States? If you enact that kind of policy, that's the effect. Is it's just moved to Europe, it's moved to Asia. It hasn't stopped. It's just not happening here, which is honestly too bad.
and it does nothing to accomplish their public policy objectives, because if folks are not in the U.S., they're not subject to U.S. law.
Right. And it's worth pointing out that it was the crypto community who found out the fraud at FTX, not the regulators, right? And, you know, it's funny how math and public blockchains are much more good at keeping people accountable, much better at that type of detection. And so I think actually people prefer well-ordered, honest, immutable records going forward. And it's just a matter of time. But as soon as we can get the policy to be friendly, Texas has certainly been very friendly. That's brought a huge amount of miners and other folks here. You know, I think if we can see more of that, we'll see an explosion of interest and growth in the U.S. the next 10 years. But we have to get the policy right.
Completely agree. And yeah, I think it's just a matter of, it's inevitable, but it'll take bringing the government along, kicking and screaming probably to get there.
Well, we're getting close to time, but I want us to close out with just some final thoughts in terms of like, where are we going? So we talked a lot about like what kind of government policies we might expect, how long it might take to even get there. Like, you know, very shortly going down, starting with you, David, what are you excited about for the future and or worried about?
I mean, I think we're at a great point where we're getting towards mass adoption. There are 400 million people now with a Web3 wallet. I think in this next cycle, we can get that past 1 billion people.
Yeah, I'm excited about the fact that I think products are becoming increasingly useful to people in their everyday lives. And to Bill's point, that's how we're going to win. I think winning is inevitable, which is kind of shocking to hear from someone who works in policy. I do think it'll take a while, but yeah, it's all going to work out.
I'm excited about more and more platforms are maturing their operations. They're operating with a variety of products and services available to more people, and operating in a way that that acknowledges risk, that acknowledges consumer and user safety, and they're just maturing their operations instead of the tumultuous past that we've had in DeFi.
I think you're going to see a deeper debate about the nature of regulation of software, and I think that debate is going to be informed by increasing sophistication among policymakers and the community generally, when they talk about that this isn't just about finance. This is about essentially blockchain transactions that can be useful for many different reasons, right? Commercial, social, art, and I think that complexity will start to manifest, and that's really going to change the regulatory debate for the good.
All right, I'm excited for that, and that's why we're all here to talk about how those regulations play out with policymakers. So thank you all for coming and sharing your thoughts, and thank you all for being here.
Hey guys, thanks for coming out to the 2023 North American Blockchain Summit. It was the best summit yet. We look forward to hosting you again next year. If you enjoyed the summit or like what you saw in this video, be sure to subscribe. If you're interested in learning more about membership in the TBC, go to texasblockchaincouncil.org to learn more.